This is the Friday, August 17 edition of the Market Plus segment. Joining us now is Darren Newsom. Darren, welcome back.
Thank you, Mike.
Glad to have you here. One of the things we didn't get to talk about in the show, and I'd like to touch base on just a little bit, is cotton. What do you see? We had an up week this week.
Yeah.
Where do you see that going forward?
Cotton's really had a tough time lately. You know, it did tick up a little bit this week, but by and large, it's still caught in this sideways trend. We've still got some bearish fundamentals hanging out there. News that Chinese demand's actually going to be going down instead of increasing. This is one of the few markets where we actually see demand slowing, and so, you know, there's just this weight on the cotton market right now that these little rallies that we see are going to be very difficult to maintain. We don't have a great deal of investment money coming in that's interested in cotton. So I think the bigger picture, the long-term picture in cotton is one that this is a market that's going to struggle. It's going to struggle against the other grains. It's going to struggle against the other ag markets in general. And I think this will be one that traders are willing to sell.
All right. So as we head into these little rallies, sell into them.
I think so. If you're a producer and you see these rallies, see these spikes in the market, maybe following something else, following some of the market, I think you use that to your advantage and you get some price protection on.
All right. And with regards to China, is their reduction in demand, is that based with slowing their economy, or is there anything that could happen over there that could help cotton?
Well, they're actually looking at replacement. You know, we get to these points where we have replacement products that move in, and right now they're looking at replacement products for cotton. You know, cotton from other areas, cotton, other types of cotton, and these sorts of things. And it's just, the overall picture now just continues to grow more bearish. And this is again one market. This is one of the few markets that we see that in, and certainly it doesn't bode well long term for the cotton market.
All right. Well, and let's talk about something related to the producers here with the basis. We were mentioned just briefly aflatoxin in the corn supply. What do you see that having an effect on basis for the producers out there?
There's a lot of things out there that point to that we're going to have a stronger basis going forward, and I really think that we will. The cash market is going to be strong because of this tight supply. But when we start dealing with the aflatoxin issue, and aflatoxin is expected to be, it's supposed to be a larger problem this year because of the drought. The issue is we're going to have those bushels. Yeah, we can't use them anywhere else. I mean, we don't have any exports. We're going to have reduced bushels. We're going to have reduced production. But the bushels that we do have aren't going to be able to use for feed and at least export. So now we're going to have these bushels that, yes, they're smaller, but now we can't use them. And so I think we're going to see a deduction put on those bushels to try to move them into the system, and that deduction in price is going to be reflected in possibly a weaker basis. So I understand the argument that the overall tight supplies are going to strengthen basis, and I don't disagree. But when we get to talking about aflatoxin in particular, possibly localized where it might be heaviest, I think those areas could see a little bit of weakness in basis due to this problem.
All right, so for producers out there, should they be taking steps to protect the basis that's out there now, or should they risk it and see how things look as harvest rolls through?
There are some things they can do. They can go in and forward contract, but again, it's the same problem. How much do you forward contract? Because you don't really know what your production is going to be. You can use the DTN index futures that are traded on the Minneapolis Grain Exchange. They're cash based, and you can use those as your against your hedges in the other futures market, in the Chicago futures market, and this is a way of locking in basis as well. So there's some ways of going about it, of protecting yourself, and then waiting to see what type of, how large this problem actually turns out to be. You don't want to get overexcited, just like with anything else. You don't want to get overexcited about locking in this basis, because again, it could firm because of the tight supplies as long as demand holds together. But if you're concerned about your area, concerned about the aflatoxin issue, there are some avenues you can take to protect yourself.
With regard to the basis growing stronger, what sort of time frame are we looking at on there to get an answer as stronger or weaker?
I think here in the next 30, 45 days is probably going to be the key to the market, because this is where we're going to see our yield numbers coming in. A time of year, normally at harvest, we see corn basis, soybean basis, whatever, get weaker. I don't think we're going to see that weakness this year. I think we're going to actually see basis firm as harvest goes along, because the yields are probably going to be more disappointing than what some are projecting right now. That's going to last about 30, 45 days. Then we're going to get into the issue in corn of demand starting to back off, continuing to back off, and then I think that could start to weaken basis as well. The key to basis at this point, we've seen exports already slow. We've seen feed demand already slow. Ethanol demand has really been what's supporting, domestic ethanol demand has been what's supporting the basis. So as long as that holds together, I don't think basis is going to collapse. That starts to come back, get whittled away, that's when basis could start to come under pressure.
All right. I'd like to talk a little bit about what you see going forward as the important things to look at. And you mentioned during the show under the market segment, you're concerned with the spreads.
Yep.
Could you explain that a little bit, kind of go into a little more detail, what you see going forward and how that's going to affect
To me,
producers out there?
one of the keys to the way I study the markets is to look at these future spreads, the trends of these future spreads, how these prices of any market line up. I put more reliance on those for a picture of what the actual fundamentals of the market are, rather than anything that's in the USDA reports or any government reports. So, if we look at these future spreads, we talked about the sharp inverse. In other words, the nearby contracts much higher price than the deferred in soybeans. Similar situation in the corn market, and even in the deferred wheat, we're seeing that, which goes back to that discussion that we had about at some point Europe's going to run tight and the business is going to come to the U.S. So watch the trend in those spreads. As long as we see that inverse continuing to strengthen or holding in place, that means there's still concern this market's going to not only support the futures price, but should support the cash price as well. We usually see a strong cash market in an inverted future spread situation. So to me, that's the key. As long as those hold in place, we should have a strong market. When those start to change, start to soften a bit, that's when we could be looking at the different problems in the cash markets as well.
All right. Well, we've got a couple questions here from Twitter. We did have Jason in Iowa is asking, will demand destruction beat the price of corn back down to $7? And if so, what's the time frame on that?
$7 really, if we look in the grand scheme of things, it isn't that far away. I mean, we're trading at 8 right now. Technically, just from a technical point of view, we could drop this market back to 7 without really blinking an eye. That can happen in just a matter of days. The early threat was if we blow up demand completely, that we would take it back down to the $2.50 to $3 level, back before where we were before this whole demand market started. I think that threat has been muted a great deal by the way the market has behaved here of late. So I don't think we're going to go that low. Could we get back to 7? Yes. If so, I'm going to guess maybe late 2012, early 2013, before we get into this rush, before we get into this fight for acres in the spring of 2013. So maybe hit a lull over the winter. Longer term, could we pull back maybe even as far as 6? Outside chance, yes. But again, the overall tight supply situation and demand methodically or in a well-organized manner coming down, I think it's going to provide support.
All right. Any final thoughts you've got to wrap up the show here?
This is one of the more interesting ones that we'll talk about for a long time, for years to come. I think what's going to be important is how these markets, how these spreads react, and how the investment money comes back into these markets. We talked about some of the bearish factors that could push soybeans lower, all of them being investment related. If they're still willing to buy in at these levels, I think it changes the nature to how these markets trade. They're not really as scared of volatility as what we once thought, and they're not as scared of buying at record high prices. So what that would tell me, supply and demand is coming back to the forefront, which is something that we haven't seen off and on for many years now.
All right. Well, thank you so much, Darren. Appreciate you being here, and join us next week.